time for our 360 round to make news, make light of what's going on with this tariff story. You're seeing the market selling off. Now what? Phil Blancato is with us, chief market strategist at Osaic Wealth, and Eric Winograd, chief economist at Alliance Bernstein. Thank you both for being with us. Phil, I'll start with you. I mean, I had friends who were buying overnight. They didn't make any money yet because it went even further to the downside. What say you about this sell-off today?
I think it's very much overdone. I'm shocked at the market's reaction. I think it's a lot about more headlines than reality. You look at economic data going into this environment, the labor market, in my opinion, maybe a tad bit weaker, but nothing significant. You look at earnings for the first quarter were strong. GDP came in strong. ISM today came out. Services came out, still on expansion, a little lower. So I'm surprised at this. I think this has a much greater impact on the GDP of other countries and less so with us, unless we get into a prolonged trade war, specifically with the EU and China and some of the other Asian countries. For me, I think this is a great opportunity to finally buy a company that you really like at a much more favorable price. For example, NVIDIA trading at 104. When's the last time you get to grab onto arguably the most provocative and forward-thinking company in the world today at a price point that makes sense finally?
So you would buy NVIDIA today at 104?
I would buy that and a handful of other names because I think it's an opportunity to take an overreaction in the market based on tariffs. And here's why. Tariffs in and of itself, we've set the bar now, right? We know what the tariff number is. We've gotten rid of the uncertainty, I think, to a great degree. And now you have this scenario where a negotiation process will more than likely happen. I think some are going to stay to try and bring manufacturing back. But ultimately, we have a scenario where now the skies, I think, have cleared up a bit. We know what to expect. It's an opportunity to buy really good names at a much better price. Pick the name. We can get into a bunch on the show today that I think are great opportunities finally.
Yeah. Okay. Eric Winograd, your thoughts here. When we take a look at some of these names that are selling off, are you seeing buying opportunities or are you worried?
So I won't talk about specific names. I'll just simply observe that I disagree with almost everything Phil said. I think that, if anything, the market is underestimating the magnitude of the tariffs, right? My mandate is economics. And so when we look at the economic impact of what was announced yesterday, it probably knocks almost a full percentage point off of GDP for the year. It probably pushes prices up by at least 1% and maybe a little bit more. This is a really significant downgrade to the economic outlook. And Phil is correct. I do agree with him that the data coming into it looks okay. But the name of the game here isn't what the data said about yesterday. It's what it's going to say tomorrow. And I think that even if only a large part of what was announced yesterday sticks, the data are going to take a meaningful turn lower. And I expect over time for the market to reflect that.
So would that mean recession in your mind, Eric? Maybe?
We're close. Certainly I also agree with what Phil said, that this is a bigger deal outside of the U.S. and in Europe, for example. If a 20% tariff sticks on Europe, that probably does push the euro area into recession. For the U.S., our growth forecast coming into yesterday was around 1.4% for the year. We'll probably be very close to zero based on the numbers we saw yesterday. And I would caution, again, Phil is correct. I said I disagree with a lot of what he said. I agree with him that a negotiation process could start. But I think it's important to recognize also that we don't know that yesterday is the end of this. Just as a negotiation process could lower tariffs, you would expect to see, and history would teach you to expect, that some of our trading partners will respond and will respond more aggressively. And if that happens, we could see things move the other direction too. So there is a lot of volatility, but the economic impact of what we saw yesterday and what that's going to mean for the next few months and quarters and even potentially years is something that I don't think we can ignore.
Yeah, I'm looking. I mean, there are so many names that are down. Jabil, Valero, those were down 11%. I have all these names. In the S&P 500, 12% of the stocks are down 10% or more. So there's a lot of names to choose from if you actually think that this is a buying opportunity, Phil. What other names are you watching closely?
Well, I'll give you anything like American Express. That's absolutely getting murdered today. So where I would take this out of Eric's point is, yes, if we get into a full-blown trade war, we got much more things to be concerned about. But to me, the U.S. market's always driven by the U.S. consumer. Today, the U.S. consumer is 25% of global trade. And I would disagree with Eric completely and say the U.S. consumer is in great shape. You have had wage growth greater than the rate of inflation now for a couple of years. You have full employment. We have no cracks in the labor market. And if we get into a trade war and we see corporate earnings under pressure because of higher prices. Okay, some of this could get worse. I just don't think that's the case. I think there's enough cushion in the earnings cycle to absorb some higher costs. And because of that, a name like American Express was just getting crushed. Yeah, is going to be a great name to buy very inexpensively, because to suggest that the U.S. consumer, which is 25% of global GDP, is suddenly going to stop spending because of marginally higher price points in certain products. Remember, I don't think tariffs are inflationary. I think tariffs are a one-time price hike on certain items. I just don't think I don't think that slows down the U.S. consumer.
Howard Lutnick, our Commerce Secretary, I saw him this morning speaking. I'm seeing some headlines here that he thinks that the U.S. markets will perform extremely well long term, despite Trump's tariffs sell-off. And he said long term or even medium term, you got to expect U.S. markets that they're going to be extremely, extremely well. I'll give you the final word, Eric.
Sure. It depends on how long your long term is, doesn't it? Right. I think that over the long term, the American economy is resilient and is the strongest in the world. And I think that's likely to remain the case. But in the short term, the price increases we're likely to see results in a hit to consumers of something like $4,000 over the course of this year. That's almost 10% of disposable income. That's a big deal. So, long term is long term. And for most investors, that's probably the way to play. For those who are thinking shorter than whatever that long term is, though, just keep your eyes on what's going on with the data, because I think that things are poised to change in the coming months.
Okay, he hedged. He said maybe the medium term, too. I think the long
medium term for some is long term for others, right?
Term. All right, Phil Blancato, Eric Winograd, great to see you both.